Hello everyone and welcome back. So to kick things off, we will have a look at the Binance and Washington drama. So pretty much Binance is back in the political spotlight, and a group of lawmakers who go by the United States Senate Democratic Caucus, interesting name, is obviously calling for an investigation whether Bitcoin has been playing by the US sanction rules. So pretty much they even sent letters to the US Attorney General and the Treasury Secretary. I mean, when senators start writing letters with your name on it, it doesn't really sound like anything positive. So that's like a adult version of saying we need to talk. So what does this mean? More regulatory heat, more uncertainty, and markets hate uncertainty, almost as much as Twitter hates slow news days. So let's have a little look at the news article. Senate Democrats urge AG Bondi and Treasury Secretary Besant to probe Binance amid sanctions concerns. So as you can see in this news article, Sen. Chris Van Hollen led a letter with 10 other Democrats expressing concerns about the safeguards Binance has in place to prevent illicit finance. The scrutiny comes just over 2 years after the crypto exchange pleaded guilty for failing to register as a money transmitting business and breaching sanctions. So it's not looking too good. So next we'll be taking a look into oil. Oil has been rising, and that's a big deal. When oil goes up, fuel and logistics get more expensive. And boom, that's inflation going up again. When inflation heats up, the Fed is definitely not rushing to cut interest rates. Higher rates is tighter liquidity, meaning investors taking a break from risk assets like crypto. So in the short term, it's not so great for Bitcoin and its friends, but in the long term, maybe actually a good thing. If inflation sticks around, people start questioning flat currencies, and Bitcoin goes back to being viewed as digital gold, the shiny thing you buy when everything else seems on fire. Expensive oil could boost Donald Trump's energy narrative about ramping up domestic drilling. High oil, good for the US energy companies, good for his campaigning messages, but bad for anyone pumping gas. But that's another story. So key levels to look at. So a stability zone would be $70 to $80 per barrel. Above 90, that is when inflation gets loud enough for politicians to actually agree on something, which says a lot. And then we have the JP Morgan regulation that might finally help crypto. So JP Morgan Chase made a pretty interesting statement. They're saying the proposed crypto structure bill, the Clarity Act, could actually become a major positive catalyst. So in plain English, they're saying like, hey, if the rules stop being confusing, big money will stop being scared. And honestly, they are right. So a lot of institutions have been waiting for clearer regulations before jumping into crypto. So if this passes the bill, this could open up a door to real, large-scale institutional participation. So long story short, regulatory clarity equals more liquidity, more stability, and more growth. And then finally, we have the Ethereum price breakdown. So let's have a look at Ethereum. So as you can see, my chart, maybe it looks a bit confusing, but I'm gonna break it down so you guys understand. So Ethereum has been stuck in a range for a while. Normally, when price sweeps in the upper boundary of a range, we expect it to wander back towards the lower boundary, kind of like ETH saying, hey, let me check what's happening down here. But right now the market is overloaded with short positions. When too many people bet in the same direction, the market loves to do the opposite, just to ruin someone's day. So it's possible that the midpoint of the range could hold, and the price could climb back up for another retest of the top. If that retest holds, boom, continuation of the uptrend. But here's the catch. Everything depends on the US stock market open. If Wall Street wakes up in a bad mood, volatility goes wild and crypto usually follows. Pretty much if Ethereum drops, a sweep of the $1,740 liquidity level followed by consolidation could offer a clean long setup, which is in this liquidity area. So the first target would be the 0.5 range level. As you can see, like I said before, it could hold in this position. So the final target would be the $2,155 target price. So that is obviously this area in here. And pretty much that is the top of the range. So to wrap things up, Ethereum is ranging, but loaded shorts and market conditions might create a reversal opportunity. So that is the markets right now. A mix of politics, oil, and traders praying that the charts respect their lines for once.